Once a year, the Social Security Administration produces a single document with your name on it that quietly determines the exact size of every retirement check you will ever receive for the rest of your life. It is called your Social Security Statement, and buried inside it is a year-by-year record of everything you have ever earned. That record is the foundation the government uses to calculate your benefit. And here is the problem. That record contains errors far more often than almost anyone realizes. Those errors almost always run in the government's favor and not yours. And the Social Security Administration will not catch a single one of them for you. The burden is entirely on you to find them. A serious error on that record can quietly shave $300 or $400 a month off your check, not for a year, but for the entire rest of your retirement. And the worst part is that if you wait too long to catch it, the law says it can no longer be fixed at all. Most retirees have never once looked at this record. The ones who do look and who find a mistake and who fix it in time often recover more money than they will make from any single investment decision in their entire retirement. In the next 15 minutes, I'm going to show you exactly what this statement is, how to read it line by line, the 3 errors the Social Security Administration makes most often that you have to catch yourself, and exactly how to get them fixed before the window closes. Nothing in this video is financial advice. If you find an error on your record, confirm your situation with the Social Security Administration or a credentialed professional before acting on it. Let me start with what this document actually is, because most people have only a vague idea, and the details matter enormously. Your Social Security statement is the official summary of your work history as the government has recorded it. The centerpiece of it is your earnings record, a table that lists year by year every dollar of wages and self-employment income that has ever been reported under your Social Security number, going all the way back to your very first job. For decades, the Social Security Administration mailed this statement to every worker once a year. Then, to save money, they largely stopped mailing them. Today, for most people under retirement age, the only way to see it is to go online and create what is called a My Social Security account at the official government website, SSA.gov. If you have never done that, creating that account is the single most important task you will take away from this video, and in a few minutes I will walk you through exactly what to look at once you are in. Here is why this record is the most important financial document you may never have read. Your Social Security benefit is not based on your last paycheck, or your final salary, or some simple average of your career. It is based on a very specific calculation. The Social Security Administration takes your highest 35 years of earnings, adjusts each of those years for inflation, adds them all together, and divides to find your average monthly earnings across those 35 years. That average is then run through a formula to produce your monthly benefit. Every single year inside that 35-year window matters. And here is the key point. If even one of those years is recorded as lower than you actually earned or is missing from the record entirely, your average drops, and your benefit drops right along with it, permanently. The government is not calculating what you actually earned over your lifetime. It is calculating what its records say you earned. And if those records are wrong, your check is wrong, and it will stay wrong for the rest of your life unless you personally do something about it. Let me make that concrete. Imagine a man who worked a solid, steady career, and in 1994, he earned $50,000 at a company that was bought out the following year. In the chaos of that acquisition, his wages for 1994 were never properly reported, and the year shows up on his record as a blank. He never notices. 30 years later, he files for Social Security, and his benefit is calculated on a 35-year history that is silently missing one of his good earning years. That one blank year, once it is indexed for inflation and run through the formula, knocks a chunk off his monthly check, and because Social Security grows every year with cost of living adjustments, that small initial gap widens a little more every single year he collects. Over a 25-year retirement, one unreported year can quietly cost him many thousands of dollars. And he never knew, because he never looked. So how much can an error actually cost you? It depends entirely on the size of the error. A single missing year on its own might only cost you $20 or $30 a month. That does not sound like much, but over a 20-year retirement with cost of living adjustments compounding on top, that 1 year alone can add up to $7,000 or $8,000 of benefits you simply never receive. Now scale that up. If several of your highest earning years are understated, or if an entire stretch of your earnings was reported under the wrong Social Security number and never landed on your record at all, the damage climbs fast, into the hundreds of dollars a month, $300 or $400 in the worst cases every month for the rest of your life, and growing with every annual adjustment. That is not a rounding error. That is the cost of a real vacation every year, or a meaningful chunk of a grandchild's tuition, lost quietly because nobody ever checked a table on a government website. So let me walk you through the 3 errors the Social Security Administration makes most often, the ones you have to catch yourself, because the system will not flag a single one of them for you. Error number 1. Missing or understated earnings. This is by far the most common. It happens when an employer either fails to report your wages to the Social Security Administration at all, or reports a number lower than you actually earned. And it happens far more often than you would ever guess. Businesses close down. Payroll departments make mistakes. Companies get acquired and records get lost in the transition. Small employers file the paperwork incorrectly. When any of that happens, the year shows up on your record as a blank, or as a number that is clearly too low, and unless you compare it against your own records, you will never know it happened. The way you catch this one is to pull up your earnings table and go down it year by year, comparing each year against your own W-2 forms or tax returns from that year. If a year you know for a fact you worked shows 0 or shows an amount that is obviously too low, you have found error number 1. Error number 2. Earnings recorded under the wrong name or the wrong Social Security number. This one is sneakier because the money was reported, it just landed on the wrong record. The most common cause is a name change that was never reported to the Social Security Administration. A woman gets married and starts using her married name at work, but never updates her name in Social Security's files. So her employer reports her earnings under a name that does not match the government's record, and those earnings drop into what is called a suspense file instead of onto her account. The exact same thing happens after a divorce when someone changes their name back. It also happens from a simple typo, a single transposed digit in a Social Security number on a W-2 form, and your earnings for that entire year get credited to a complete stranger. You catch this one the same way, by going year by year, but fixing it requires proving the earnings were actually yours, which is exactly why your old tax documents matter so much. If you have changed your name at any point in your working life, this is the error most likely to be hiding in your record right now. Error number 3. Self-employment and side income that was never properly credited. If you ever ran a small business, did contract work, freelanced, drove for a service, or earned what gets reported on a 1099, those earnings only count toward your Social Security benefit if they were properly reported and the self-employment taxes were paid and recorded. The self-employed are far more likely to have gaps in their record because there was no employer payroll department handling the reporting. It was all on you. And the rules for reporting self-employment income are more complicated than a standard paycheck. A year where you ran your own business, but the income never made it onto your Social Security record, is a year that is silently dragging your benefit down. This one matters especially for the retiree who spent part of their career working for themselves, and it is the error people are least likely to ever think to check. So, here's exactly how to check your record, step by step. Step 1. Go to SSA.gov, the official government website, and create your My Social Security account if you do not already have one. Be very careful here. Use only the real SSA.gov address. There are imposter websites built to look exactly like the Social Security Administration so they can harvest your personal information. So type the address in yourself and make sure it ends in .gov, not .com or anything else. Step 2. Once you are logged in, find your earnings record, the year-by-year table of everything you have earned. Step 3. Gather your own evidence. Dig out your old W-2 forms and your old tax returns. If you cannot find them, you have options. The Social Security Administration will give you free copies of your own W-2 forms going back to 1978 when the purpose is Social Security related. The IRS can provide wage and income transcripts going back about 10 years. Step 4. Go down the table 1 year at a time and compare. Does each year match what you actually earned? Are there any blanks for years you know you worked? Are any amounts obviously too low to be right? Write down every single year that looks wrong, because that list is what you are going to act on. If you find an error, here is how you fix it. And this is exactly where most people give up, which is precisely why the errors persist for decades. The form you need is called Form SSA 7008. the Request for Correction of Earnings Record. You can get it on SSA.gov or from your local Social Security office. On that form, you list the years that are wrong and what the correct earnings actually should be, and you submit it along with your proof. The best proof is a W-2 or a tax return for the year in question. If you genuinely cannot locate those documents, do not give up, because the Social Security Administration's own rules allow other forms of evidence, including, in some situations, a written or even a spoken statement from the employer who paid you. Once you submit the correction, it typically takes somewhere between 10 and 90 days to process, depending on how complicated your case is. It is paperwork, it is a little tedious, and it is very possibly the highest paying paperwork you will ever fill out. Now here is the part that makes all of this urgent, and the reason this video is titled the way it is. There is a deadline. As a general rule, you have 3 years, 3 months, and 15 days from the end of the year in which the wages were paid to correct your earnings record. After that window closes, the law treats the record as final. Now, there are important exceptions, and the good news is that those exceptions cover most of the situations where people actually find mistakes. Things like an employer's outright failure to report your wages or correcting your record to match what you already reported to the IRS on your tax return. But you do not want to be betting your retirement on whether your particular situation happens to qualify for an exception. The safe move, the only truly safe move, is to check your record now, and to check it every single year while your memory is fresh and your documents still exist, and to fix any error the moment you find it. The retiree who checks at 60 and catches a mistake from their 40s still has every document and every option available to them. The retiree who never bothers to check until the day they file at 70 may discover an error from 30 years ago that no longer has any paper trail and no longer falls inside any window. Same mistake, completely different outcome. The only variable that changed was when they looked. One more thing worth clearing up because it confuses people. The Social Security Administration sends out a few different documents and they are not all the same. The annual statement we have been talking about, with your earnings record inside it, is the one that determines your benefit and the one you have to audit yourself. Separately, once you are already collecting, you will get a cost of living adjustment notice each year telling you how much your check is going up, and you may get a benefit amount notice confirming your new payment. Those are useful to keep, but the one that can quietly cost you hundreds of dollars a month through a hidden error is the earnings statement. That is the one almost nobody checks, and that is the one this video is about, so let me bring it all together. Once a year, you can pull up the single document that determines the size of every retirement check you will ever receive. The earnings record inside it is wrong far more often than people think. The errors almost always run in the government's favor, and the Social Security Administration will not fix any of them unless you make them. The 3 errors to hunt for are missing or understated earnings, inscredited to the wrong name or Social Security number, and self-employment income that was never properly recorded. You catch all 3 the same way, by comparing the record year by year against your own W-2s and tax returns. You fix them with Form SSA 7008 and your proof. And you do it now, not later, because the law puts a clock on how long you have. The people who treat this statement as junk mail and toss it in a drawer are the ones leaving $300 and $400 a month on the table for the rest of their lives. The people who spend one afternoon a year checking it are the ones who catch the mistake while it can still be fixed. It is, without any exaggeration, one of the highest paying afternoons of work available to anyone approaching retirement. If this video was useful to you, the most helpful thing you can do right now is hit the like button, because that is the single signal that tells the YouTube algorithm to put this in front of more retirees who need to check their record before it is too late. Subscribe if you have not already so the next breakdown lands in your feed. And if you know a friend, a sibling, a parent, or a neighbor who is still working or approaching retirement, send them this video directly, because most people have never once looked at this statement, and the ones who change their mind after watching are the ones who catch the mistake while there is still time to fix it. YouTube is also showing you a video right now on the screen because they think it is the next thing you need to see. Go ahead and click it. I will see you in the next one.